Hello and welcome to India's Angels, the show that puts the spotlight on the men and women who actively seek out high-risk ideas that will hopefully give them good returns on investment. This week on the show, we profiled two early-stage VCs who have risk-taking in their DNA and have made good returns on investments a habit. Coming up, Sarath Naru, Siddhartha and Venkat Bobba of India's oldest venture fund, VenturEast. They talk to us about taking contrarian bets, and entrepreneur-turned-investor Alok Mittal takes us through Canaan Partners India strategy.
You have to be a junkie of some kind. The high is going to come from discovering what was not a smart thing to do, but you actually come out with some very smart outcome at the end of it.
A business plan is projecting financials which look unrealistic. That's clearly a red flag. There's too much buzz around that sector. That's also a bit of a red flag.
At the end of the day, lots of stuff comes back to your judgment about the opportunity, about the team, their integrity. But the instinct plays a tremendous amount of role.
Sarath Naru started his venture career back in 1997 at a time that wasn't particularly appealing for international money to VenturEast. Naru at the time was a US-based entrepreneur looking to make his way back home, and he spotted an opportunity to participate in the privatization of the Andhra Industrial Development Corporation's venture fund. Naru's team was chosen over the Mahindras and CRISIL, and the fund house hasn't looked back since. Here's a quick look at what they've been up to since 1997. VenturEast has made over 60 investments since 1997 and has over $300 million under management today. With limited partners like IFC, Google, Agronaut Private Equity, the Saudi Economic and Development Company and LIC, VenturEast has many firsts to its credit. It was the first Indian VC to float an incubation, seed and early stage fund in partnership with IIT Madras in 2001. It launched the first life sciences focused fund in 2005 and the VenturEast Proactive Fund in 2008, which has been investing in technology enablers with the emphasis on the digital divide, bottom of the pyramid markets and SMEs. And their most recent first is a micro equity fund to provide equity-like financing to small neighborhood businesses. Always looking to make the contrarian bet and actively seeking out brick-and-mortar businesses that other VCs might not touch has been VenturEast's strategy. Early investments in businesses ranging from port management to dairy cooperatives, organic farming and drug discovery companies. This type of investing has been exciting, but the team at VenturEast believes they've come with their own set of challenges.
The gut instincts and the due diligence part are the two essential pieces of this game, particularly the VC game. And lack of knowledge, you're operating in an area where you're looking at a futuristic sector sometimes, right? And then how do you make a call on where is the data for that? Having said that, 95% of our business is all about the formality and the ability to do proper due diligence. The fund manager, the investment manager, the VC needs to connect on all those aspects through third parties in order to make sure that all these hypotheses that they're making are actually some way validated. Then you get into the situation, how much due diligence can you do? And there's a cost to due diligence. Cost from financial cost, there's also a cost of time. Sometimes the entrepreneur is not ready to wait for you. And I think that's where the judgment part comes. At what point of time can you say, hey, I've done enough due diligence and we can make the call now? You cannot validate this fully. And the kind of bureaucratic approach saying, I need to validate this right to the nth degree, that'll fail.
And it was perhaps for this reason that Sarath ensured that the team he built at VenturEast approaches investing like an entrepreneur approaches his business. With a corporate career spanning 36 years in pharma and life sciences companies across the US, EU and Asia, Venkat Bobba says dealing with Indian entrepreneurs presents some unique challenges.
Indian entrepreneurs are very aggressive, very passionate, sometimes overpromise, underdeliver, okay? In the interest of saying, I want to get it done, I'm going to get it done, all that stuff. So they're a little less pragmatic in that way. Culturally, I see our entrepreneurs have a difficulty communicating the bad news promptly. And the contrast to that, US, is when something even likely to go wrong, they call, hey, SOS. Here, although they haven't thought through the details or gone through the detailed business plans, reduced it to the numbers, they say, trust my instincts, okay, trust me, I work hard, I'll make you money. Okay. Whereas US, they do reasonable amount of analysis, however imperfect it is, and present the facts and say, here are the downside risks. Okay. If this happens, and you could lose all your money. And you never hear that from an Indian entrepreneur. Always thinks it's going to succeed and you're going to make a lot of money. Okay.
One of the few early-stage investors in the life sciences and biotech space in India, Venkat believes the opportunity is huge for entrepreneurs given the sheer numbers that need to be addressed in the Indian market. But for a VC with a fiduciary responsibility to return money to its limited partners, exits are proving to be difficult.
Most of the first-generation entrepreneurs, a lot of them are family managed. And when it comes to exits, our goal here is help the company to progress to the next stage and take our money out in 4, 5, 6 years and return it back to our investors with a decent returns. What happens with this family model, where the family would like to keep the control of the company, that means they would not want to sell to strategic player more than 49% of the company. That means simply our exit potentials getting limited to either IPOs in the Indian market or the entrepreneur buying our shares back. M&As is one of the hottest spots, right, of the exits for a lot of people. And with this philosophy of our first-generation entrepreneurs, I want to keep it in the family. It's more important for me to have my name in the front of the building than $100 million cash in my bank account.
And investors too, Sarath believes, need to approach their activities with humility.
The ability to make that business successful is with the entrepreneur. So if you enter this business thinking that you're a hot shot because you raised some capital, somebody was foolish enough to give you some capital, and you deploying it gives you all that power and the wisdom, then one is mistaken. That's the whole point that's being made.
So for VenturEast, the rapport they've built with their investee companies and the values that they proactively bring to the table for the entrepreneur is critical. And this is a quality that two first-time entrepreneurs were able to grasp about VenturEast in their very first meeting with them. What's ironic is that both of them were very wary of bringing a VC on board at the time that they met them. Rajasekhar Reddy Seelam set up Shrestha, a farm-to-fork organic food business in Hyderabad in 2004. As a first-time entrepreneur, he was clear that he needed a partner who would act as a sounding board, but the word on the street was venture money knew no patience. Today, Shrestha produces and markets Indian organic products under the brand name 24-letter Mantra. Its products are available in major retail chains like Spencer's, Bharti Walmart and Nilgiri's, and is marketed to over 15 countries globally. Now, Seelam is focused on creating a standalone retail chain, something they sidestepped in 2005.
When we started off, we were clear that yes, this was something more for brand building and then as a stopgap measure. But I think that point of time, 2004-05, also was a lot of this retail boom was going on. We also got carried away with it for a short while. I think that was a reality check when VenturEast stepped in and said that let's look at this carefully, let's be cautious, and let's prove this model before we venture out.
Well, clearly what we look for in business plans is the opportunity has an addressable market which is interesting to us. We look at business plans where there is an entrepreneurial team that is well-rounded in terms of covering all the functional expertise. And we also look at, whether the business model has any barrier to entry in terms of intellectual property.
So entry barriers are good. But what happens in businesses that by their very nature are tough to get into? For ex-GE India head Tejpreet Chopra's Bharat Light and Power, the need of the hour was recognizing the value that the right kind of capital could bring to his early-stage clean energy venture.
What we did look at was potentially doing a listing very early on in one of the markets like the AIM market. We even spoke to some of the large private equity players who were at that point in time looking to invest fairly large capital. And then we looked at the venture capital space as well. The decision that we finally made was that we figured that as we grow this company, it'd be good to get the right kind of capital for different stages of the growth of the company. And that's why we figured for Bharat Light and Power that VenturEast would be a good partner at that point in time. So you need capital who are willing to experiment and innovate with distributed solar solutions or distributed biomass solutions or smart grid solutions, where capital is willing to give companies like us or innovative companies like us the latitude to actually go and try and experiment using these new technologies.
And this applies to VenturEast's team as well. Not one to blindly chase returns, they have seen a healthy growth on investments but believe the value their enterprises have created for society is much bigger. So if you're an entrepreneur looking to make a pitch to VenturEast, here's what you need to keep in mind.
Do not discuss valuation right at the beginning. Present a well thought out big idea. And thirdly, tell us how we can help you beyond the money.
Have no fear of failure. Be realistic and transparent. Surround yourself with a lot of smart people and only lead them. Don't micromanage them.
Well, some claims speak for you. The message from VenturEast is simple. Know your motivations and then venture forth, and you will not be disappointed. With that, it's a wrap on this story. But coming up after the break, we meet Alok Mittal of Canaan Partners.